Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson with a breakdown of the action in today's session, Tuesday, October 8th. And as always, Ed, a lot to discuss.
Yeah, a lot to discuss. Nice day, especially on the Nasdaq. Want to take a look at Robinhood, Commvault, and Eli Lilly.
Okay, we will check in on those three stocks, but first let's take a closer look at those major indexes. The Nasdaq with a notable gain today, up almost 1.5% by session's close, leading the way. The S&P 500 also with a solid gain, up almost 1% on the day. The Dow was positive, up 0.3% on this session and closing back above 42,000. The Russell 2000 also up on the day, but with just a fractional gain here, up 0.2%. So green across the board and a tech-led day, Ed.
Yeah, and just to put in Monday's action in context, yeah, we fell, but the major indexes held their 21-day lines, and the Russell almost did. And today, I think it snuck above that, so it found support there. They're all trading in ranges today. Nice bullish comeback for the Nasdaq and the S&P. The Nasdaq, yeah, sort of breaking a trend line decisively, well, clearly above the 18,000 level.
Right.
And, if you think about all these stocks that are forging bases and patterns like the Nasdaq, like the S&P, there are a lot of stocks are setting up, and a number were flashing buy signals today when you start seeing that movement. So a really nice action. It makes Mondays look very, look comfortable in hindsight. So again, showing really constructive action. We really haven't even moved out of this pattern yet.
Exactly. And I think that's also why it pays to have some patience when we are in a power trend, and we have been in a power trending market here for the last little bit, Ed. So when you get a pullback in a power trend, you want to see support hold. And as you mentioned, that's exactly what happened.
Yeah, and this is also why when a rally really gets going, you want to start building up that exposure. If you had a lot of exposure from, back from a couple months ago or several weeks ago, the last few days was like not that big of a deal in most cases. And so now you can be incremental with things or shuffle things around, like sell something, add something new. But it's much easier to weather those ups and downs when they're pretty small in the context of, yeah, you're up 15%. Oh, no, I'm up 13%. It's just a different kind of thinking.
Well said, Ed. Okay, moving on. Let's take a quick look at the 10-year Treasury yield. What are you seeing here, Ed, with the yields? We're continuing to climb. Obviously today, not at the same pace as we have been lately, but still, what do you make of the action here as we're seeing equities in this power trend, yet the yields going up, Fed's cutting rates? What's happening?
Yeah, the Fed may not be cutting rates as much as we had thought. I think that's what it comes down to. The economy looks a lot better than we thought maybe a few weeks ago. A lot of solid or strong reports. So we're seeing the Treasury yields come up. Not all bad. I mean, the reason why stocks are weathering this is because we're sort of removing that recession risk. It's
Right.
not that inflation is flaring up. It's that growth is a little stronger, maybe fewer rate cuts, but if you can have 2.5%, 3% GDP growth, I think most people would be pretty happy with that scenario.
Yeah. Okay. Well, something that we will continue to monitor here. And next on our list, let's take a closer look at some ETFs, adding a little color to the action today. Here's SMH, which represents the chips, up 1.7% on the day, Ed.
Yeah, and that NVIDIA was strong. There's a lot of chip names looking strong today. Taiwan Semi has sales tomorrow, so that'll be important. But there's a few names like NVIDIA, Taiwan Semi, and Broadcom that look better than SMH. It's, and generally as people talk about, well, when do you buy ETFs or not? This is a situation where there's a few names, and these are some of the biggest names in the ETF, but
Right.
this is lagging in that regard. But still nice to see this come up.
And you could still get exposure to the group, I suppose, if you wanted to eliminate that single stock risk. You could go
Absolutely.
with something like an SMH or even an SOXL, perhaps, if you want a little more heat, as SMH gets back above the round number of 250 there. Okay, next on the list, let's go to IGV, check in on software, even stronger here out of the broader technology area. With the IGV ETF up 2.2% on the day, continuing to add to the gains. We talked about the breakout from this long sideways area a couple of weeks ago, and the software sector has been trending nicely since. But today, a notable day of outperformance.
Notable day. There was a lot of software names that were showing strength. Not too many that are look right like this. There's actually some that are really extended, some that are coming up. So this is one that's more like, hey, well, maybe this is a way to play it because there's not as many software names. I'm sure you can find some. We'll take a look at one soon. But yeah, this is coming on. So it's nice. SMH is coming on. The software is coming on. The mega caps are rising. Definitely in the tech side, things seem to be working together.
Yeah, speaking of the mega caps, here's a look at the FNGS ETF, representing those FANG Plus names or your Magnificent Seven type stocks, up 2.2% on the day. Let's now take a look at KWEB. We've been stunned by the explosive gains out of China, Ed, and I guess this is what happens when you play with fire, aka a stock or an ETF, making a purchase after it's made a huge move. You can get some of this volatility. And so China names getting smacked down today with KWEB down 10%.
Yeah, and there was a lot of names, obviously, like that. And, China had been rising on stimulus, and there has been a lot of stimulus, but people were waiting, okay, fiscal stimulus will come in too. And today, basically, they didn't give anything. And so there'd been a lot of anticipation of that. So Hong Kong was down a similar amount to KWEB. Yeah, exactly. You just have to watch out. That's why I was nervous. As it turned out, if you bought that first day or the third day, it would have worked, but you don't know when a day like this can happen. So it's just, you have to play the odds a little bit, and maybe this consolidates, maybe they'll come up with stimulus later, but wow, what a move today.
Yeah, and that's the thing. I mean, if this is going to be a long tailwind for that market, we should see some sort of consolidation and lower risk entry point. I think that was the thing, even on that first day.
Yeah.
Was that really a low risk entry? Not really,
No.
so it paid off, high risk, high reward for those who played it right those couple of days. So we'll continue to monitor this space and see what unfolds here. Okay, next on our list, let's check out XME, the metals and mining ETF, down 1.8% today, but off lows. This is one of those groups that was sort of moving a bit in tandem with the China explosion, Ed. So what do you make of the action?
Yeah, it's nice to see it bounce off of this. It's somewhat exposed to the copper miners, especially, and some of those plays, and those also came off. And just have to see now. Maybe this is a nice pause because it had run up, and so this is one like, oh, you might see a pullback, and obviously, and now it's at it.
Yeah.
So this is actually somewhat nice because it felt like it was due for a pullback, and it actually was. So we'll see if it can come up. And it's nice the U.S. economy is doing a little better. If you can see global growth pick up again, that would be really helpful for this group. But yeah, just pulling back today.
Okay, we'll have to keep tabs on potential setups in this space. Let's also go to USO. The price of oil has been closely watched lately, and this too ending its win streak, down 4.3% on the day. The USO ETF, that is, moving with the price of oil, Ed, which has come up off lows quite a bit in the last handful of sessions. So getting knocked down today.
Yeah, I mean, there's a lot of one-off news events. I mean, there's Mideast fears, which you never know when that's going to get worse or get better. There's the hurricane. You don't know when that's going to get worse, get better. There's been the China stimulus. And then, so it's like a lot of these, it makes it really tricky to know how to do it. It's been a lot of sort of big news events driving this.
Yeah. And so from a technical perspective, we did talk about a trend line that this ETF was getting above. It's still above it, but has paired some of those gains lately. So another area that is in flux, right? we shall say. Okay. And then last but not least in this section of our analysis is a look at the insurance ETF KIE, bouncing back today, up 1.2%. taking a step back over the last couple of months, it's been trending well, seeing some outperformance versus the S&P 500, but a big whack yesterday. Another one-off headline, and maybe you mentioned this with all other headlines that you mentioned, the latest hurricane causing some jitters, understandably, everyone on edge after Helene.
Yeah, and that's going to hit landfall, I think, tomorrow night. So we won't really know until Thursday, and it really may not be until the weekend or early next week that we really get a sense of the damage and whom and how that might fall out. So it bounced back, but there's a lot of one-off. Who knows where this is going to go? What's been priced in, what hasn't? So, but you're right. The trend has been very positive. It's just for people who bought, say, last Friday. That those people had tougher situations. But if you had bought earlier, when it was maybe a little more low risk, that ETF and those insurers have done better.
Mm-hmm. Okay. Well, a lot for investors to navigate right now, Ed. And it also seems like we have seen, in addition to some of these news-driven rotations, in general, it does feel like we have seen some sector rotation. So how do we handle that?
Yeah, that is difficult. I know that was something David Ryan was bringing up a lot on IBD Live today. Yeah, there's been a lot of rotation between this group and some of them come back and some of them don't. So it makes it tricky. Again, this is why it's I've personally been trying not to do a whole lot, maybe just make little moves, but have significant exposure, because it's not, the market's sort of in flux, a lot of one-off events, the rotation between sectors. It's hard to know when to chase, because if it's like, do you
Right.
jump in and then it comes right back down? Because sometimes you have one-day rotations. Oh, it turns out in the hindsight, look, there was this 6-week rotation, or it became a multi-year rotation, but it's hard to know. So again, I think maybe not right now, with the market sort of in a tight pattern, not doing a whole lot, and also having a diversity of leadership. Don't have all AI chips. Don't have all insurers. Like, have quality leading stocks in a variety of groups, and then some of this rotation becomes a little less volatile. It'll be a little bit more like the general market, which has been trending up, but not having these massive swings.
Right. And the other thing I would add to that is something that I'm telling myself is don't chase the shiny objects,
Yeah.
right? I think there is that temptation to have the FOMO, or, oh, well, what if I would have, gotten more aggressive and broken my rules of the setups that I know work for me. We talked about KWEB. Was that really a low risk entry? So looking for the setups and the stocks or ETFs that fit your trading style and IBD's methodology. We're looking for strength, outperformance, the solid fundamentals and story. So all of those things together versus just, hey, this is hot today. Look at this latest meme stock or flashy thing. Because I think ultimately that can distract you from the true quality that's out there that is, going to hopefully get you that outperformance over time. The tortoise and the hare strategy,
Yeah,
right?
we like some fast tortoises, but not necessarily other hares. And I would add something you bring up is you often talk about the focus on early entries. And I think early entries are really important in, when you have rotations, because if you want to get those at the beginning of the move, if the move is only going to last a few days, you're hoping that it'll last longer, but if it only lasts a few days, you want to get in early on. So get those watch lists and be really on top of it, rather than, oh, it's been 4 days
Right.
and it's extended from the other moving averages, and now you jump on, as you say, the chasing the shiny object. Yeah, that's when you get in trouble, especially with rotations.
Mm-hmm. Yeah, entry points are super key. So something that we're all very focused on here at IBD. Okay, well, speaking of, let's talk about some stocks with potential entry points. Going over to Robinhood, an explosive move here for the app-based trading platform, up almost 10% by the end of the day. This is a stock that we have been covering for weeks on end as it formed a cup with handle base and presented some potential buying opportunities over the last couple of weeks. And this morning on IBD Live, before it got as extended as it ended up getting by the end of the trading day, Ed.
Yeah, I think by now I might be getting a little extended. It might technically be in range from an alternate handle sort of there. And that handle is more in the upper part of the base. I feel like this is a pretty legitimate alternate handle because the other one was pretty low in the base and there were sort of unusual things that kept it in there. So I think this was a decent place to enter in. But yeah, it sort of got away. There was time to do that for a couple of hours, then or maybe even longer, but it definitely kicked in as it just like in that last bit. Certainly as it got past, 25, it just kept on adding in. Look, really strong action. It was interesting. I'm not exactly sure what drove it because I don't think Bitcoin had a particularly strong day, especially early on. But this has been really coming on the relative strength line. It's not at highs, but it's getting awfully close to consolidation high. There's definitely above the handle high, really strong volume. There's some strong fundamentals on this one. And it seems to have the right mix of, brokerages and Bitcoin plays are a pretty decent mix right now. There's a lot to like about where this is in the space of the market.
Yeah, strong volume behind today's move, and the relative strength line does look like it's getting pretty close to prior highs. Definitely,
Yeah.
Highest levels in quite a while. It looks like the prior high for the share price of 24.88 from July. We're now at 25.61 here. That relative strength line has surpassed that level. So that's underscoring the price outperformance here for Robinhood stock. And I totally agree with you on the handle. I mean, the first one was formed almost completely below the 50-day line, which is pretty unusual, I would say.
I think it was if it weren't for that early August sell-off, which was an unusual put your thumb over it, that wouldn't have been in the upper half, which, I mean, it was legitimate, but it's just sort of like it's sort of, this one felt like more like where you'd expect a handle to be.
Yeah. It was tricky though, because it did try to move out a couple of weeks ago. It came back down, but for those who use that 21-day moving average, which is a technical level that we'd like to use for swing trading and position trading, I would say it did end up finding support there before today's move. So good stuff. Okay, let's check out CVLT. This is Commvault Systems in the database software group. You said we would be checking in on a software name. So here we are, one with a breakout today and some compelling chart action here, Ed.
Yeah, and this is also in the cybersecurity space too. I mean, while this is a traditional breakout, I mean, it's coming off the 21 sort of 50-day, 10-week line. It's really not that extended from the 50-day line even after today's move. So it's not like one of those situations where some of these breakouts are like way up there, but clearing up there. There's nice tight action ahead of that. So a lot of good action here. It's really made a strong move. And it has a full-on base. It tested the 10-week line a couple of times. But here's a nice base. The growth isn't the most amazing, but it's solid growth. So that one's been in the revenue growth picked up. It was the best in a while. So this is just a strong, solid performer here. Again, there's some names that this is not going to be like some other names that have these, huge betas, but definitely one that you could be considering for your portfolio.
Some tight action, as you mentioned, Ed, within this base. The entire structure formed above the 50-day line, and the depth of the base very shallow at 11%. And when we saw that craziness that you mentioned in early August, this stock held up relatively well because A, it was already running, and then B, it had an explosive reaction to its last earnings report, up 23% on the day of the last earnings. And we've got another report coming up here in about 3 weeks' time. So for those who did initiate a position today, that could be enough time to build a profit cushion. You never know until you do get closer to the actual report what that profit cushion looks like. But there is a little bit of time here, I'd say.
Yeah.
Okay, let's also check out Eli Lilly, ticker LLY, up 1.7% on the day. Full disclosure here, I am back in the stock. I've been trading in and out of it. That's the other thing with sector rotation, Ed, is sometimes you do lose your patience, but I would rather follow my rules and try to get a toehold in something of quality again than chase the shiny objects. But we'll see. I don't know how convinced I am yet, but I do think that the action today was notable.
Yeah, and just to compare this to NVO, that's an example of like, oh wait, let's just wait. Oh, it'll come back. Well, it may, but this one's come down a lot more, and it hasn't bounced back. So, and it's like they're both selling the same kind of drug. So you'd think, well, surely, it's like, well, not necessarily. Lilly has a lot of other things going on, but yeah, today's action bouncing from the 50-day, 21-day line, especially near the intraday highs, it was sort of getting up to say a tight trend line as well. So you could use that as an early entry. It tried to break out like a few weeks ago, when it sort of went straight up with this V-shaped pattern, actually, the V-shaped pattern. That didn't happen. As you say, then you were pointing to a couple spots where it tried to flash some early entries and it didn't work. So we'll see if this one happens. So that's another thing. So you could now, if you didn't initiate a position today, you could say, well, you know what, I want to at least get above today's high, and then see, because then you're getting more above that trend line. You'll still be very close to the 50-day line. Just prove it to me. But, again, this is an area we could do things. That could be a place where you add to it as well, or there you wait. You could start there because there's a lot of trading in that area. So there's places where you could enter this. Obviously, this one, again, this is part of that amazing sector of beyond AI. This is the other huge generational thing. People may look back and say the age of Ozempic, and I know they don't make Ozempic, but they'll still call it the age of Ozempic, and Lilly is benefiting from that, and a huge run. Does it need to take a break? We'll see. It's taken a break, but not. Maybe it's ready to go again.
We'll have to see. And I would say a knock against it, or something that I'd like to see, to your point about, okay, can it at least get above today's high, is how many closes it's had off of its highs. I would have preferred a stronger finish today, right at the highs. So if it can show that kind of power and sustain it throughout the day, I'd feel a little more confident in it. So we'll see what happens.
I think that's a very good point. The volume hasn't been great the last couple of days as it's made its little move. It'd be nice to see that volume just a little stronger. And earnings aren't too far away. And Lilly and Novo tend to report around the same time. I haven't checked to make sure that that's when earnings are, but that's probably when they are. So something to note. Can you build up enough of a cushion before earnings?
Right, because in terms of the personality of this stock, I would say that this is one where you really do, if you're going to try it, it would need to be closer to those moving averages, because it forms a lot of bases along its run. So I think this is one that, again, if you do try it, you do need maybe a little more patience than what I've been giving it. And so maybe I'm talking to myself here to be a little bit more patient with the stock. So I'm not sure how big of a move it's going to make in the next couple of weeks heading into earnings. But as with everything, if we have a strong market, that perhaps could help fuel the stock. But it may be hanging out in this base until the report. We don't know.
Yep.
All right. Well, thank you so much, Ed. And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all those details. We will see you then. And then we'll also see you right back here tomorrow after the close.